To understand China's latest financial move, let's start with the basics. Government bonds, which are the foundation of how nations raise money and manage their finances. Think of a government bond as a loan you make to a country. When you buy a bond, you're essentially lending your money to the government, which promises to pay you back with interest on a set date in the future. This arrangement is a win-win. You get a reliable return, and the government gets the funds it needs. Bonds help governments fund big projects like building highways, expanding public transport, or constructing new schools and hospitals, without immediately raising taxes on citizens. This allows for long-term investments that benefit society as a whole. Investors, from individuals to massive institutions, buy these bonds for steady, predictable returns. Meanwhile, governments use the money raised to manage their economies, stimulate growth, and respond to challenges. The interest rate on a bond reflects the country's perceived stability. Safer, more stable countries pay less interest, while riskier nations must offer higher rates to attract buyers. These rates are closely watched by investors worldwide. By issuing bonds, nations tap into global capital markets, attracting investment from around the world. This flow of money helps countries finance development and connect their economies to the global financial system. This system is central to modern public finance, linking investors and governments in a vast, interconnected marketplace that spans continents and currencies. When a major power like China issues bonds, especially in US dollars, it sends powerful signals across the entire financial system. Such moves can influence global interest rates, currency values, and even international relations. The terms, timing, and demand for these bonds reveal much about a country's economic health, its financial strategies, and its ambitions on the world stage. Analysts and investors pay close attention to every detail. That's why China's latest bond sale is making waves worldwide, sparking discussions and reactions from financial centers across the globe. On November 5, 2025, China made headlines by announcing a massive $4 billion government bond sale, its largest such offering in the past 4 years, and a move that immediately caught the attention of global markets and financial analysts. This significant bond sale marks a notable return to international debt markets for China, signaling both ambition and confidence in its economic trajectory. The deal was carefully structured into 2 tranches, a 3-year bond and a 5-year bond, designed to appeal to a broad range of investor preferences, from those seeking shorter-term security to those willing to commit for a longer period. But perhaps the most intriguing detail is that these bonds are issued in US dollars, not Chinese yuan. This choice is strategic, as it opens the door to a much larger pool of international investors who prefer the stability and liquidity of the dollar. By borrowing in dollars, China taps into the world's deepest pool of capital, while also sending a clear message of confidence in its financial strength and its ability to meet obligations in a foreign currency. Issuing dollar bonds also sets a valuable benchmark for Chinese companies, making it easier and often cheaper for them to raise money internationally by referencing the government's borrowing costs. This move is part of a broader effort to integrate China's corporate sector into global finance, a strategic goal for Beijing as it seeks to modernize its economy and expand its influence. It also demonstrates China's comfort with managing foreign currency obligations, even as US-China competition and global economic uncertainties continue to make headlines. The timing and size of this bond sale are no accident. They're calculated to showcase China's economic resilience, its ability to attract global capital, and its ambitions to play a bigger role on the world stage. By taking on dollar debt, China is making a statement. It's ready to play by international rules, attract global investors, and prove its credibility in the world's most important financial markets. The sale isn't just about raising money. It's about setting a new standard for China's presence in world markets, and showing that it can compete with the biggest economies on their own terms. This calculated move deepens China's ties with international investors, strengthens its position in global finance, and paves the way for more Chinese companies to access foreign capital. The world is watching closely to see how China leverages this financial power and how it navigates the challenges and opportunities that come with greater integration into global markets. This bond sale is more than just a financial transaction. It's a bold step in China's evolving global strategy and a signal that the country is ready to shape the future of international finance. The real headline? China's $4 billion bond sale attracted a staggering $65 billion in orders. That's over 16 times the amount offered. an extraordinary show of investor confidence. This overwhelming demand let China secure lower interest rates, saving billions in borrowing costs. Major institutional investors, pension funds, insurers, asset managers, view Chinese debt as a safe, reliable asset. Their participation signals deep trust in China's long-term stability, despite global uncertainties. The massive order book boosts China's financial credibility and prestige on the world stage. It proves China can raise huge sums on its own terms, strengthening its economic firepower. This isn't just a technical win, it's a global vote of confidence in China's future. The flood of orders for China's bonds is a powerful endorsement of its economic management. Investors are betting on China's long-term growth, not just reacting to headlines or politics. Even amid US-China tensions, global investors see China as a credible, stable borrower. This success helps China set new benchmarks in global finance, challenging the dominance of US treasuries. As more investors buy Chinese bonds, the yuan's global role could grow, a key goal for Beijing. The bond sale marks China's evolution from world's factory to a major financial power. Attracting global capital enhances China's reputation and influence in the world economy. This is as much a political win as a financial one. The timing of China's bond sale was no accident. It coincided with a thaw in US-China trade tensions. Announced after a key Xi-Trump meeting, the sale signaled China's confidence and willingness to engage constructively. By raising billions at low rates, China showed it's financially resilient, even after years of trade pressure. The move strengthens China's hand in negotiations, proving it doesn't rely on any single nation's goodwill. The sale also capitalized on improved market sentiment, riding a wave of optimism as trade tensions eased. This strategic timing built goodwill with global investors and reinforced China's image as a rational, stable player. The bond sale became a tool of economic diplomacy, aligning with a positive shift in geopolitics. It's more than finance. It's a message of strength and cooperation. China's bond sale happened alongside major shifts in US-China tariff policy. On the same day, Beijing suspended a 24% retaliatory tariff on many US goods for a year, lowering costs for American exports. China also lifted tariffs on key US agricultural products, reopening its market to American farmers. The US responded by reducing tariffs on Chinese goods, marking a real step back from the trade war. These moves lower costs for businesses, boost confidence, and support global growth. The coordinated tariff cuts are more than symbolic, they have real economic impact. Combined with the bond sale, they signal a shift from conflict to cooperation in global trade. The world economy stands to benefit from this pragmatic turn. China's financial and diplomatic moves are reshaping the global landscape. China's recent $4 billion bond sale marks the latest in a series of calculated moves to expand its influence in global finance. This deal is not just about raising capital. It's a signal to the world that China is committed to deepening its integration with international markets and strengthening its financial credibility. After a 13-year hiatus, China made a notable return to the dollar bond market in 2017 with a $2 billion offering. This move was seen as a way to test international investor appetite and re-establish its presence on the global stage, setting the tone for future deals. Each subsequent bond sale has grown not only in size, but also in ambition, reflecting China's growing confidence and sophistication as a global borrower. The steady increase in deal volume demonstrates a clear strategy to build trust and credibility among international investors. In addition to dollar bonds, China has issued euro-denominated bonds, further diversifying its funding sources. This approach helps reduce reliance on any single currency and broadens China's appeal to a wider range of global investors. By embracing a multi-currency strategy, China showcases a level of financial sophistication that challenges the traditional dominance of the US dollar. This move also signals China's intent to play a more influential role in shaping the future of international finance. Investors and analysts around the world watch these deals closely, using them as a barometer for China's economic health, policy direction, and its evolving position in the global financial system. Consistently strong demand and favorable pricing have helped build China's reputation for financial strength and reliability, attracting a diverse pool of investors from across the globe. The 2025 bond sale stands out as the boldest chapter yet in China's ongoing rise as a central player in global finance, highlighting its ambition to shape the future of international markets. China's 2024 $2 billion bond sale in Saudi Arabia marked a new phase in its financial diplomacy. Issuing bonds in Saudi Arabia deepened ties with a key energy partner and supported China's Belt and Road ambitions. The deal was smaller than the 2025 sale, but strategically vital, expanding China's influence beyond traditional financial centers. Listing the bonds in Saudi Arabia helped the kingdom's goal of becoming a regional financial hub. The 2024 deal was targeted. The 2025 sale is a global statement of China's appeal as a safe haven investment. Both deals use the US dollar, highlighting its central role in global finance, even as China eyes a bigger role for the yuan. The Saudi deal was a stepping stone. The 2025 sale cements China's status as a top-tier global borrower. Why does China's bond sale matter globally? It's a real-time test of investor confidence in China. The huge demand signals that, despite political friction, global finance sees China as stable and essential. For investors, Chinese bonds offer rare, high-quality returns in a low-yield world. The sale encourages more Chinese companies to issue bonds, deepening global capital flows. For other countries, China's success sets a high bar and could stabilize emerging market debt. This bond sale marks China's growing sophistication and influence in the international financial order. China is mastering global finance to advance its interests. The world is watching, because this is more than a bond sale. It's a move that will shape the future of global finance.